stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zach's Director of ETF Research, Nina Mishra, to talk about a very hot topic in ETFs right now. I didn't even realize it was hot until like a week ago, actually, but now it's hot again. And these are the pot stock ETFs, as some like to call it, the cannabis ETFs, the marijuana ETFs. I never know which name to use. Is there like a it's all over the place.
Right.
So we'll just call it all of those things. And a couple more of these ETFs are suddenly bursting on the scenes. And the only reason I know this is because a couple days ago, I got an email from my brother saying, he just was like, I want to invest in this. And it just had this ticker. So I'm like, oh, this ticker doesn't seem familiar to me. I don't know what this is. So I go into Yahoo Finance and I type it in and it's like weird. There's like no name in the Yahoo Finance. It is like trading. And then I look down, you know how there's always articles and there's nothing. There's no news on it. I'm like, what kind of shady thing is this that he's asking me about? I thought it was like some weird, volatility index thing or something strange. And then so I'm looking around some more and putting it into Google instead of just into Yahoo Finance to see like maybe this ticker will come up. And then I discover that it's a pot ETF that just launched like that day. So then I come to you, Nina, because you're our ETF expert here at Zach's. And I'm like, what's going on? Like, why is there no news on this? What is this? And then you inform me that more pot ETFs are even coming.
Right.
And so I'm a little dubious. And then to top onto that story, I was listening to a new podcast that we just launched here at Zach's called The Paper Trader. And Danny and Eric are the hosts of that one. And they're talking about being like beginning investors. And they were talking about a couple stocks that they liked. And they had like the tickers there. And one of the tickers was MJ. And I'm like, oh, I've never heard of that one either. So I looked that one up and then they start talking about it on the podcast. And that's the oldest one of the pot ETFs. So I'm like, wait a minute. They're even talking about it on Paper Trader now suddenly this week, these pot ETFs. So I should have known because the pot stocks themselves are super hot still.
Exactly.
Everybody's interested in them, even though they're having kind of a tough year, a lot of them. And so, but we haven't covered the ETFs in a while because when we've talked about the pot stocks in general, a couple of the episodes I've done here, there was only this one ETF. And isn't this that weird one that was like a Latin America ETF and then suddenly became like a pot one? And so I just kind of been avoiding it because that seemed weird, but I didn't realize now, how long has it been the pot one? It's been a while, right?
Yes. So there was only one pot ETF earlier, as you mentioned.
That's the MJ one, ticker MJ.
Yeah, so it is ETF MG Alternative Harvest ETF, ticker MJ.
So that doesn't even have pot in the name.
It didn't have pot in the name.
They didn't even go there maybe because they were a little scared because they were the first ones. So they didn't want to go with like cannabis or marijuana. So alternative harvest. Okay.
Yes. So as you mentioned, this used to be a Latin America real estate ETF.
That's right.
And in December of 2017, they changed the index. One fine day, they changed the index. And that's absolutely legal. That's perfectly legal. But by doing that, taking that shortcut, they avoided the lengthy SEC approval process. Because I understand that after that, the SEC is really looking at the approval of pot ETFs. They are making sure that everything those ETFs hold is perfectly legal. They are even asking for outside legal opinion on each of the securities those ETFs are going to hold. So MJ took a shortcut.
Yes, and I remember us talking about this after they took the shortcut and that there was some talk that maybe some of the banks wouldn't back it or whatever because of these legal reasons, but here we
Yes.
are, it's still going, and now they are backing these other ones.
So, 33 states and the District of Columbia have legalized marijuana's medical use and supply, and 11 states, including Illinois, now allow marijuana for recreational use, but it remains illegal at the federal level. And the Trump administration has not been very pot friendly, unlike Obama administration. So that is why banks usually do not want to do anything with marijuana companies because they are federally regulated. So when MJ changed its index and became a marijuana fund from a Latin America real estate fund. So it was reported that MJ's custodian, U.S. Bank, was not very happy and comfortable about the change. So MJ had to actually replace their custodian, and Wedbush Securities were their new custodian.
Okay.
Now, MJ was the only ETF, so the only pot ETF. So obviously they had the first movers advantage because there was obviously so much investor interest in pot stocks and ETFs, and they did pretty well last year. It was MJ was one of the hottest top performing ETFs last year. So that is why MJ was able to gather more than 1.1 billion in assets.
Yeah, I saw that it was pretty big.
It's a pretty big fund now. Now we have one more ETF which launched in May, and it had an excellent ticker, YOLO. And
yes, YOLO.
Yes, it is the Advisor Shares Pure Cannabis ETF.
Yeah.
It launched in May, as I mentioned, and it now has about 59 million in assets, or 57 million in assets. Now, this is the first actively managed marijuana ETF. So that is the big change over there. And I think active management makes a lot of sense because this space stocks are so volatile. These are mostly new and risky companies. So that is why there was a lot of interest in YOLO too. And further, YOLO, they got their securities pre-approved by the SEC reportedly, and also by their custodian BNY Mellon. So that is why they had no issue of custodian being a U.S. bank. Now, last week, as you mentioned earlier, we saw the debut of another pot ETF, which was...
This is the one my brother tweeted me about or texted me.
Yes, it is called the Cannabis ETF, ticker THCX. It is by Advisor Shares. And this is passively managed. It is the cheapest so far, charging 70 basis points in expense ratio. Now, at least a couple more are launching very soon. This one by Amplify ETFs, and the ticker would be CNBS, and that may launch this week.
Okay.
Maybe tomorrow or day
so the
after.
week of July 15th, for those listening.
Yes. So I'm excited about CNBS because this is actively managed by Tim Seymour, who is a CNBC pot expert, and he's often a guest on Fast Money.
Okay.
And,
I know who he is. Yeah.
So Tim Seymour is one of the experts in the cannabis industry, and he's also on the boards of many cannabis companies, I understand. So this should be interesting. This is one to watch out for.
Do we know how many holdings that one might have yet?
According to the prospectus, I think it had about 35 holdings to start with. But
that sounds similar to some of these other ones, right? The THCX has, I think, 35 as well.
Yeah, MJ has 38 holdings.
Okay.
YOLO has 29 holdings as of now, so a little more concentrated portfolio. THCX also has 35 holdings. On CNBS, of course, we will get more details when it launches. But this will also focus on pure play marijuana companies. So according to CNBS's prospectus, 80% of the portfolio will be in companies that derive 50% or more of their revenue from cannabis and hemp ecosystem.
Okay, so for those listening, that means they will not be owning companies like Constellation Brands, right? Because they're not getting 50% of their sales yet from their investments in the pot. So a company like that, a food or beverage company that has made investments in are no-goes for these funds.
Yes.
Okay.
So, for example, MJ holds some other ancillary and other industry.
Okay.
And it has exposure to other companies that would indirectly benefit from pot.
Okay.
For example, Scott's Miracle Growth.
Yeah.
And tobacco companies like Philip Morris, they are in MJ's portfolio. So
Okay.
MJ has a more broader portfolio, broader exposure. Both YOLO, and YOLO is also a pure cannabis ETF, so it focuses only on companies where cannabis is the focus. THCX also is more pure play. And CNBS also would be a pure play cannabis ETF. Another ETF by Cambria with an excellent ticker,
Okay.
TOKE, TOKE.
Okay.
That is expected to launch in the next couple of weeks.
So why do you think all of these are launching here in 2019? Because MJ pretty much had it to itself for over 2 years.
Yes. So MJ, as we know, it took a shortcut, and after
Yeah.
that, SEC took a lot of time.
Okay,
And
so
approving, they asked so many questions, and they asked for
I see.
independent legal opinion. So although all these ETFs that are launching now, they were filed many months back,
Okay.
but they got the SEC approval only now. Now, MJ obviously had the first mover advantage, so we will see whether other ETFs that are launching now, whether they would be able to gather assets or
Yeah.
they would struggle to survive. So this is something which we saw with blockchain ETFs too.
Okay.
Because Bitcoin was so hot towards the end of 2017
Yeah.
when it was soaring and almost touched $20,000. So we saw at least 4 blockchain ETFs launch within a short amount of time. So the first 2 which launched on the same day, they were able to quickly gather assets, and the others that launched after a few weeks, they really struggled. And in fact, one of them had to close down. So we'll see what happens with these ETFs that come after a few weeks. Now, as I mentioned, MJ is broader. One more thing which I read in a Wall Street Journal article is that MJ has more established companies because it also holds companies which have indirect exposure to pot.
Right.
So those are more mature companies, whereas YOLO, they had compared MJ and YOLO, and so they said YOLO has riskier companies. So according to the journal analysis, as of July 2nd, YOLO had only 4 stocks in its top 25 holdings that had earnings, whereas MJ had 14 out of its 25 holdings, 14 out of its top 25 holdings that had earnings.
I noticed also when I was looking at MJ that it actually pays a dividend,
Yes.
and that's pretty sizable, 2.3%.
Yes.
And now this explains why, if they're holding like Philip Morris and companies like that. Because I was trying to think, like, who's paying a dividend in this area other than Innovative Industrial Properties, which is a REIT that they all seemingly own. And that does pay, but that's not even yielding the 2%, I don't think, anymore. So that's interesting.
Yeah, another reason why they are able to pay a dividend and they are able to beat the index at times is because they have a good securities lending program. Because there are so many, traders, they want to short these marijuana stocks, the hot marijuana stocks, and the interest rates on borrowing, the short rates, they are very high. So that's why they are able to earn additional earnings through the short lending program.
Okay. And I also was noticing that on the volatility of it, in that year to date, MJ is doing pretty well, actually. But again, I didn't know what its holdings were in there compared to, some of the others are struggling, but it's also could be when YOLO launched, the
Yes, it
pot
was
stocks
more-
were on the downward slide down. So
Yes.
since then, so they kind of have been burned by when they launched, really, when you look at their chart. But I did notice that there was quite a bit of difference there. But again, some of that makes sense if they're holding companies like Constellation Brands and Scotts and Philip Morris.
Right, yeah.
Versus these other guys.
Yeah, as far as the performance is concerned, I think it's more about timing.
Yeah.
So if you look at the top holdings for MJ, GW Pharmaceutical is the top holdings, holding with 8.9% of the portfolio, and Kronos, Tilray, Aurora Cannabis, Canopy Growth, all well-known big cannabis companies.
Yeah, the growers up in Canada.
They are the top holdings in this ETF. If you look at YOLO's portfolio, on the other hand, it looks very different from MJ's portfolio. Owning Organigram Holdings, which is a Canadian pot company, that is the top holding, which with almost 77% of the portfolio weight. Innovative Industrial Property, which you mentioned, is a REIT focused on medical marijuana industry.
Yeah.
That is the next holding.
And that's been soaring, so that should help them.
Yeah, then you have Ephria and Kenny Trust, Hexo. So Canopy Growth comes at 7th or 8th position. So,
and Tilray's not even on there.
It's not even on there.
Is this one was actively managed?
YOLO is actively managed.
Okay, so that you can tell from the holdings.
Yes. And if you look at the holdings of THCX, they look pretty similar to MJ's holdings, with all the well-known pot companies, Kronos, GW Pharmaceuticals, Aurora Cannabis, and Tilray, Canopy. These are the top holdings with more than 7% weight each in the portfolio. But the ETF THCX, which is the latest entrant, it does not have any tobacco and alcohol exposure.
Okay. What about, you mentioned one of them was the cheapest.
So
that was the THCX that just launched.
Yeah, THCX is the cheapest so far.
How do the expense ratios look on all of them?
So MJ charges 75 basis points, YOLO 74. I'm sure that was not a coincidence.
No. And that's actively managed.
That's actively managed, but they kept the expense ratio 1 basis point less than MJ. Because investors are becoming very cost conscious. ETF investors in particular are becoming very cost conscious. Then THCX launched with 70 basis points expense ratio, and CNBS, which is again actively managed, would have 75 basis points expense ratio, as I understand.
So they're all similar.
Similar, because the competition is, so high. And especially the ones that are launching later, they cannot charge more than MJ. Otherwise, they will not be able to attract gathering assets. Gathering assets is going to be a problem for them.
Okay. So what else should investors know if I was just looking at all of these? I mean, it was good clues you gave about the blockchain ones, that some of them might not survive. Mm-hmm. So what does that mean for me as an investor? Let's say I buy one of these and then it does decide to close up shop. Then I just get my money back. Is that how it works?
Yes. So if an ETF liquidates, your money is not a problem.
Okay.
But it may, you may have some other investment plans. So one fine day you get your money back, and you may have some capital gains.
Yeah.
If there is profit on that particular ETF, so you will be stuck with those capital gains, and also you will have to reinvest that money. So your investment is not a problem. They announce a date at the time of liquidation, so you get your money back as of the NAV as of that day will be given back to you.
Now, what about having supposedly we're going to have at least 5 of these going. Is there any fears of basically the ETFs owning all the shares in some of these? kind of smaller Canadian companies? I don't know.
Yeah. That could be a big concern.
Yeah.
So, everything will be owned by the ETFs.
Right.
It means. Yeah. But I think taking the ETF route is good for investors because
Yeah.
these are mostly small, new, risky companies. They may have a lot of growth potential because marijuana is becoming mainstream.
Right.
Alcohol companies are investing a lot in marijuana. So we will also probably see a lot of mergers and acquisitions in this space.
Right. I would think so.
So definitely a lot of growth potential. But again, these are going to stay volatile because there are regulatory concerns. And
Yeah.
of course, because these are small companies which are trying to grow very fast. So volatility is going to remain high. So a diversified exposure through an ETF is low cost. And it makes a lot of sense because it reduces your risk. And in my view, I think active management also makes a lot of sense.
Yeah, that's what I was
because-
just thinking in my head. I'm like, I think I'd want to be one where there's actually a manager in this kind of ETF.
Yeah, because there is little coverage of these companies.
Right.
So that is why probably a fund that is managed by an expert makes a lot of sense. That said, MJ's portfolio manager, even though it is not actively managed, I spoke with him last year. I did a podcast with him.
Okay.
And he has been in this field for a long time. He's a Canadian manager. I also did a podcast with YOLO a couple of months back. And YOLO's manager, Dan Ahrens, has been managing the ACT ETF, ACT ETF, which is the WISE ETF, which holds alcohol, tobacco, and marijuana companies.
Okay. So he's familiar with all of the sin stocks, basically.
Yeah, sin stock. That's right. So he's also, he has been in this field for a long time. And CNBS, I'm most excited about because of Tim Seymour, because he's recognized as an expert in this area.
Yeah.
And I will be doing a podcast on CNBS with their manager.
Okay.
Probably next week or within the next couple of weeks.
Once it launches.
After it launches.
Okay.
So be on the lookout.
I'm going to want to listen to that one for sure.
For that episode, and probably the THCX manager too.
You might as well have them all on.
Yes.
Good. Then we'll have like a whole catalog of podcasts on the marijuana ETFs.
Right. So another thing which I wanted to add is that while an ETF reduces risk due to diversification, but still they are going to be very volatile, much more volatile,
right,
say, than the broader market or an S&P 500 ETF. So keep your exposure low according to your risk tolerance. If you are a risk-averse investors, then I think there are other places where you should look at, not pot ETFs.
Right.
If your risk tolerance is high, then maybe a small percentage of your portfolio you can allocate to this high risk but high growth potential space.
Yeah, I think that's what my brother wants it for. He's not, he's not only invested in the marijuana stocks.
Yes.
But everybody is believing that this area will see bigger growth and that, if the U.S. ever legalizes at federal level, it'll basically explode in the number of companies that will be somehow in this industry. So, a lot of people want to kind of get in now, even though it's still a small investing space.
Right. So there was this research by Barclays which said that the U.S. cannabis market would be about $28 billion if legalized today.
Okay.
And it could grow to $41 billion by 2028. And there are other numbers, there are other projections which are much more optimistic than this. But obviously we know that this is a fast-growing industry. The use of marijuana is becoming more mainstream, more acceptable. And there is a lot of research which shows the medical benefits of marijuana.
That side is going to be huge.
That side is going to be huge. So particularly in treatments like pain management, epilepsy, epilepsy.
Yeah.
Many leading universities, they are conducting research on medical benefits of marijuana. So that is why I think definitely there's a lot of growth potential in this space, but volatility is going to remain high.
Yeah. Okay. So we'll see. I did look at some of the average volumes on some of these just for people wondering. So the MJ, because it's the established one, trades with, these are according to Yahoo Finance, about 481,000 shares a day. The YOLO is at 109,000. I didn't think that was that bad. And so far, the THCX, even though it just launched, is at 72,000. So they're somewhat traded, so
Yes.
it's not so bad yet. So we'll keep an eye on all of that. Okay, this was good. I feel like I got a lot of answers because I am interested myself in investing in some of these. I don't own anything in the marijuana space, but I want to. And it seems that the individual stocks are just, that's
Too
too
risky.
crazy,
Yes.
for me to figure out. And I've listened to some of those conference calls, and it's still crazy. So yeah, ETFs might be the way to go. Okay, so let's recap those tickers, even though we kept mentioning them. There's the established one, the Alternative Harvest, which is MJ. Then we had the Pure Cannabis ETF, YOLO, YOLO. And then the newly launched one, what's its actual name? That's a cannabis one too,
the
right?
Cannabis ETF.
Yeah, okay. So they're using cannabis there too, and that's THCX. And then be on the lookout for this new Amplify ETF coming any day. CNBS is that ticker. And then we're going to have another one coming soon, TOKE, TOKE. That one's easy to remember. So keep those on your short list, if nothing else, and pay attention to kind of what's going on here. And we'll be having more episodes to update what's going on with even the pot stocks and these ETFs. And then be sure to tune in to Nina's podcast because she's already had some of these managers on. You want to go back and listen to those if you're interested in any of these. And then she's going to have on the remaining two that are about to launch, hopefully. So be sure to tune in on those and be sure to get us somewhere. You can subscribe to all of our podcasts. We're on Apple Podcasts and we're all on Spotify. What's the name of your show again?
ETF Spotlight.
ETF Spotlight. You can get that on Apple Podcasts as well. Make sure you subscribe so you don't miss a single episode. And I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.